Place in the markets. It's overall a stable day with a little bit of mild profit booking. Remember that we've run up quite significantly. The Nifty is up around 3% on a year-to-date basis. Mid-cap index has rallied 6%. But now let's cut across to Nisha Poddar. She's standing by with Keki Mistry to discuss all about real estate investment trusts.
Hello and welcome to CNBC-TV18's new offering, REIT Connect. Now, real estate investment trusts or REITs, they are listed vehicles which allow you to invest in real estate assets such as office buildings, shopping malls without directly owning them. It can be a compelling investment for a diversified portfolio, and REIT Connect gets you all that you need to know about this asset class. Today, we are joined by the former HDFC Limited CEO, Keki Mistry, and now independent director on several companies. Keki Mistry, welcome to CNBC-TV18.
Thank you so much. Thank you, Nisha.
And the best way to introduce you is the opinion leader in the real estate sector. Initially, what's your first view on REITs? And then we'll delve into the various aspects.
I think it's an extremely important asset class. So for a normal middle-class individual to invest in a real estate asset is impossible. You know, real estate prices are so very high. Yes. So REIT gives you the ability to invest in a product where there is a linkage to what is happening in the real estate sector.
Yes.
Now, you can have various kinds of REITs, but in India, there are REITs only for commercial real estate or for retail or shopping malls or stuff like that, not for residential.
Yes. So it hasn't expanded to residential. So far, REITs have capitalized on the office spaces, as you said, in shopping malls. And what I hear, Mr. Mistry, is that many other types of real estate avenues are coming in for investments and probably will widen further. But let's focus on this. When we talk about real estate, why are REITs as an asset class and also as an avenue very critical to the sector?
So it gives, for the sector, it gives two reasons why the promoter, the person who owns the commercial property, will convert it into a REIT. One reason could be that there could be private equity investors who invested in those assets, and that private equity investor wants an exit.
Yes.
So how do you create an exit? You create an exit by create the REIT structure, list it, let the whole general public invest in that, and the private equity investor can exit. The other option is that at the end of the day, real estate is a illiquid asset. It's a great asset, fabulous asset, but it's a illiquid asset. It's not so easy to sell a real estate asset. So this helps the promoter, the owner, to convert an illiquid asset into a somewhat liquid asset by sharing the gains that will arise out of that real estate with the public.
That's right. So some of the critical highlights that you mentioned, of course, real estate could be somebody's biggest, ticket size of check that one writes out of his total earnings in his entire lifetime. And this can be in small ticket sizes, an investment which can be liquid.
Absolutely correct. The only difference is that when you're writing a check as an individual, it's a residential property. This would be a commercial property or a shopping mall or a, some kind of, some commercial activity. It cannot be residential.
Yes, so those were the positives. Now, when you talk about real estate investment into REITs, in your own diversified portfolio as an investor for your own wealth, why will you look at this as a vehicle?
Well, at the end of the day, if I'm as an investor and I do a fair amount of investment, I have a family office, my daughter does all my investments, and she keeps pushing me saying, you must buy more REITs because REITs gives you stable income. There are certain tax benefits that arise out of investing in a REIT and so on and so forth. But basically what it does, it gives you an avenue to invest in a real estate project without putting in the kind of huge amount of money that you would need to put in if you want to really buy the real estate.
Right.
So the way you should look at a REIT is it's a quasi-instrument between a debt and an equity.
Yes.
It's more akin to a debt, but also to some extent there is an equity linkage.
Yes.
What is the debt and the equity linkage? The facts which will affect the price of the REIT, there will be 3 or 4 factors.
Yes.
The first will be interest rates.
Yes.
So if interest rates go higher, the higher the interest rate, the lower will be the value of your investment.
Yes.
The lower the interest rate, the higher will be the value of investment. This is the case with any bond.
Yes.
So it's akin to that. So the value of your investment could increase if interest rates come down, or theoretically reduce a little bit if interest rates go up. That's the first point. Second point is occupancy. We had this whole COVID situation, lockdown, people working from home, where a lot of the commercial real estate offices were not occupied.
Yes.
That is a risk you take, because if it is not occupied, you don't get rent.
Yes.
And the third risk, which gives us the equivalent of an equity, is the fact that there is a slight element of credit risk. You leased a property to somebody, he's not able to pay your rent, and therefore to that extent the return gets impacted. But that's a very small risk.
All right, so that's the risk. And an important point that you mentioned is also the cash that comes out as distribution every 90 days that REITs have to do. So it's a combination of both fixed income as well as equity component. But Mr. Mistry, you have seen several of these asset classes related to real estate across the world. For more than 50 years, REITs have been a mainstay overseas. In India, it is still at a nascent stage. Only 5 years back, we have seen the first REIT listing. At what stage do you see, and what could be the potential going forward, and what can be really emulate from the overseas listings and the learnings from them?
So let me compare first India with overseas, and then come to the second part of your question, which is the future. So REITs are popular, to my mind, mainly in the US. US is extremely popular. The total market cap of the US market is something like $50 trillion.
Right.
And REITs would constitute, listed REITs would constitute something like 1.8, 1.9 trillion out of that. So it's not small, it is fairly substantial. $1.8 trillion, it's a lot of money.
Yes.
In India, on the other hand, REITs, today there are only 4 listed REITs.
Yes.
In the US, there are close to 200 listed REITs,
right.
just under 200
yes.
listed REITs. So there's a huge difference between India and the US. The market cap of the listed REITs in India would be very small by comparison.
Yes.
And the total market cap in India is, about $4 trillion roughly, whereas the market cap of all the listed REITs is under $10 billion. So it's a very, very small fragment.
Yes.
It's going to grow because there are going to be more and more of these developers who created this huge amount of real estate in the form of commercial property which has been leased out, which at some point of time they will want to convert into a REIT structure.
Right.
REITs are popular in the US, they are popular in the UK, they are popular in Japan, they are popular in Singapore. These are the 4 countries where they are the most popular.
All right, so we have to see how the India potential really progresses. But final word from you, Keki Mistry, we can't let you go without your insights on real estate sector on the whole and the key trends that you're picking at this point.
Nisha, I told CNBC multiple times in the 2020 COVID period that the best time to look at investing in real estate is then, at that time.
Yes.
And you've seen that from 2020, late 2020, right up to 2024, prices have been going like this.
Yes.
I think it's to do with the economy. Our economy in India is extremely strong, and I'm very, very, very bullish on what's happening in India. I believe the growth opportunity in India is phenomenal. We are way ahead of any other country in the world.
Yes.
And if the economy continues to prosper, which I believe it will, and I strongly think it will, then you'll have more income in the hands of people, more people will want to buy houses.
Right.
We are a very underpenetrated market. Mortgages in India are only 11% of GDP.
Yes.
In the Western world, mortgages are 50 and 60 and 70% of GDP.
Right.
China is about 24, 25%. India is only 11%. So there's so much of scope to grow. So I'm very bullish on it.
All right. So headroom for growth in the real estate sector is phenomenal. Thank you so much, Keki Mistry, for joining us. So that was all about REITs and real estate. With that, it's a wrap on this segment. But stay tuned to CNBC TV 18 for more news and updates.